Good afternoon, everybody, and welcome to MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. And this is the closing bell. It's been quite a week this week. Not a lot of action, though, except for the fact that you're taking a look at the market right behind me. The Dow Jones finished the day down 2.5 points. So it was a real nothing day, and it's been a grind slowly but surely down to this 20-day moving average. That's the next line of support. The bulls need to hold that in the short term in the Dow 30 to keep this momentum to the upside. Now, with that being said, we take a look at another big cap brethren, the S&P 500. This is the one that a lot of individuals like myself use as a barometer of what's going on with the general markets. Tested its 20-day moving average a couple times this week, but specifically today. Finished the day, though, up 380. With that being said, with the underlying above that 24.35 level, 24.25 level, this is where the short-term bulls have been holding it, and they continue to hold it, despite the fact that we do have some conceivable headline risk. Now, taking a look at the NASDAQ outperformed, but that was after a big pullback a couple weeks ago, and we see that it's been challenging its 20-day moving average. The reason why I'm highlighting the 20-day moving average is that's where the major large cap indices are all in the short term testing these bulls. This is where you're going to watch. If it drops below there, then the next level is this red line, the 50-day. That's where the battle begins. And that's where strategically a lot of traders, investors, and institutions may be shifting gears as far as what their approach is going to be as getting long stocks any further at these levels unless they see the catalyst. Now, one of the catalysts that we did see today, crude firming up. Crude had been pulling back precipitously over the last couple of weeks, and specifically this week it really pulled back, but we saw that crude actually started to pick up today, basing at that $43 level. As I said, I see that $43, $44 level as a kind of a sweet spot, no pun intended with light sweet crude, but we're going to watch that. We also saw a little nice bounce in copper. I said watch this industrial metal. This is going to be a good barometer for just different sectors, specifically materials, infrastructure plays, and we saw that play out in steel as well. As a matter of fact, if you take a look at the ticker symbol United X, which is United States Steel, finished the day up $1.18, so it's lifting up with the copper prices. Now, what did pull back, and in full disclosure, I do have a bond position on for my clients. The bonds pulled back, but they came off of their worst levels as far as price action. TLT moved back. You saw that the 2-year couldn't finish in the green, but just slightly below, basically break even. The 10-year finished up and the 30-year finished up in price. That means yields are being pressured down again. FEZ was the European index. That finished the day to the upside. It's been straddling its 50-day moving average. Some other areas that you want to take a look at is going to be housing. XHB came in. There was a lot of housing data out this week, and housing actually came out with better numbers both on pre-existing sales and new home sales, but the sector just can't hold up. I think the risk of increased interest rates, as well as the fact of the matter is, guess what? The buyers are starting to see that inventories are low on the low end of the scale. That $300,000, $400,000 level, there's not a lot of inventory. Now, the upper end of the scale, there's plenty of inventory, just not a lot of buyers. So you have this disparity right now. I think while there's been some positive sales data, a lot of inventory moving, I think you're going to see a little bit of a slowdown, especially since we're not seeing wage inflation growth. We haven't seen any movement on the political agenda of the Trump administration with all the headlines coming out about healthcare. Folks, I don't see it. It's reflecting here. The XHB, which is the home builders ETF, that actually challenged their 20-day moving average, settled right there at the end of the day. So with that being said, I'm going to be very leery. Another thing that you want to start watching a little bit more closely, if you already haven't, is the retailers. The retailers have been beat up basically for the last 3 months, but it's getting even worse now. They firmed up today, but it's been getting worse with the fact that Amazon is making these deals. Now, Amazon did announce that they were making a deal with Whole Foods, but you could have Kroger's and some other partners for example, like a Costco or something of that nature, there's been discussion that they could actually come in with a higher bid. It's going to be an interesting play, but again, you got to watch this space very closely. Retail and the consumer are big drivers on the domestic side. So if you look at XLY and see the health of the consumer is starting to wane. You see that the XLY just broke through its 50-day moving average and settled below it tonight. That means that the bulls are completely on their heels right now, both on a short-term and intermediate term. If you start to see that the retail sector is getting weak and starts to challenge on XLY, the 88, 86 level, you could see 84 pretty quickly, and that's going to change the tone of the market, mark my words. All right, folks, that is it right now. If you want to check up on any of the videos, go to our website at MarketStream.live, or you can go to our MarketStream Facebook page where it's all updated live. So check it out. Have a great weekend, and we'll talk to you soon.